Good evening, everyone. Welcome to another episode of our Life Empowerment Series brought to you by Strategic Leadership and Coaching Services. Tonight we have Mr. Jerome Hubbard, who's a representative of State Farm Insurance. Matter of fact, has his own agency and has been in the business for over 35 years. He's not a legend yet, but he is a strong foundation in Albany, Georgia. But before we start, let's pray. Lord, we thank you for the day that you've given us. God, we thank you for the many blessings you bestowed upon us today, but most of all, for us to wake up and see another day is the greatest blessing that we've gotten. So, Lord, whatever we've encountered through today, let it be something that has caused us to grow, to become wiser, to become more compassionate, more caring. And God, even for the information we hear tonight, let us become more smarter and more diligent in our efforts, not only to watch over our well-being, but the well-being of our family and closest of friends. So what we hear tonight, let us not keep it to ourselves and hoard it, but let us use it and distribute it amongst the kingdom, because this is about helping everyone become better. We thank you for all who are in attendance, all who are online, and all who will be coming in. We thank you for many blessings, and we thank your Son, Jesus Christ. In his name we pray. Amen.
Amen.
Mr. Jerome Hubbard.
Good evening. I'd like to thank Chief Persley and his wife Kim for inviting me, and hopefully tonight I can share some insurance information as well as some of my experiences to help you understand exactly what insurance is and why it is needed. First of all, I've been with State Farm Insurance about 35 years, and I'm an exclusive agent. And what that means is I only represent one company. And for a lot of people, that is very important. And the reason for that is it will allow you to know your product, it'll know your company, and it'll also get to know your clients very well. Because when they come and ask questions, you don't have to worry about 4 or 5 insurance companies. You know exactly what they have and what your insurance company can offer for them. At this time, we'd like to start off talking a little bit about business insurance. I'm not sure if there are many people here that are operating their own businesses, but entrepreneurship is the way of the future, okay? And especially for our minority community. But at the same token, when they get into this position, they have to really understand what is needed to be successful. A lot of people think, let's just get a paycheck, or we're making a bunch of money, and we'll be successful. But that is not the case. Most people that make a lot of money, they don't survive within the first 1 year, sometimes maybe 2 years, all right? And the reason is because they have not protected their assets, okay? And asset protection, no matter where you are, whether you're a small business or whether you're a sole proprietor or whether you're just trying to make ends meet from one paycheck to the next, the main priority is to protect your assets, spend them wisely. And the purpose of insurance is for that reason, protecting your assets, okay? Well, some people may say, well, I've just started a business. I don't have any assets. As long as you're living, breathing, have clothes on your back, everybody has assets. And those are the things that we want to protect. We want to protect our personal things, our personal finances. We want to make sure, first of all, that they are protected. How do we do that? Let's start with insurance, okay? First of all, when we talk about business insurance, again, the main point on insurance, period, is to protect your assets. We want to use the assets of the company, and we want to protect those so that in the event of a liability, our personal assets are not in jeopardy, okay? And in doing so, you know, a lot of people purchase insurance, but the only thing that they ever think of is they have a contract or a sheet of paper, okay? Very few people take the time to actually read what they have and understand what is going on with their policy. Or they'll understand when an accident happens, because that's when they get real inquisitive. But the thing is, we're going to talk about tonight what you have before an accident were to happen, okay? And we're going to start out. And some of the people that are here in the audience, I left them a couple of things on the table, and we'll go over those shortly. But the first thing that you'll get in an insurance policy, and we're going to talk about a business insurance to start out with. The first thing there are two main components of a business policy. One, and the foremost, is the liability section of it, okay? And there are various limits of liability. They may start at 100,000 and they may go up to 10 million, okay? What does that mean to you? What that means is, in the event that you're sued because of something that you did that was negligent, your assets are protected up to that amount, okay? So if you have somebody that were to sue you and they want to sue you for $10 million, if your policy has a $10 million limit on it, then you are protected up to that amount, okay? Now, when we talk about the word sue, okay, we have to understand insurance policies protect you for things not that you do intentionally, but things that are done because of unintentional acts or negligence on your part, okay? The next part of insurance protects your personal items. You may own a business. Let's say if you're at a restaurant. You have equipment, you have food. If it were to burn, you will lose those things. With insurance, we replace those things, okay? So those two components, you're protected liability-wise and you're protected personal property-wise, okay? Also, in insurance, we also have another part. A lot of people think that the liability section, it ends after there is a lawsuit, okay? But the whole theoretical part of it is, if you are a producer, you have a business, and let's say you manufacture items, okay? Now, not very many people understand this, but you can sell a defective item, okay? And you can be sued. Your insurance policy takes care of that. But let's say a year later, that particular product that you sold, or let's go one step beyond that. Let's say you gave a person a piece of advice if you were a consultant, okay? And a year later, that device went bad, or it caused bodily harm to somebody, or that piece of advice that you gave somebody, it caused bodily harm because they followed your advice, okay? Well, you have another part of that policy, it's called products completed liability. So even though it didn't occur initially and it was out of your control, but later on something were to happen, products completed liability kicks in to save the day, okay? What I did, I brought an actual copy of a policy with me, and we're going to actually break it down for you, okay? We're going to break it down into a couple of parts. One, we're going to break down into what we call coverage A. And coverage A is going to actually cover the part if you were to own a building, okay? Coverage B is a part that covers your property, your business property, the things that you actually use in business. And the third thing we're going to do is called loss of use. What's going to happen if your business is burned down and you cannot conduct business the way that you would ordinarily do it, okay? Now, these are things that are in your policy, but very few people understand them. Coverage A on your building. When you are purchasing a policy, business, homeowners, make sure that your policy is what we call a replacement cost policy. What does that mean? It means that your home or your business property will be replaced at today's value instead of what you paid for it maybe 10, 15 years ago. Prime example, since COVID came, building materials have escalated probably an additional 40% in the last 2 or 3 years, all right? But very few people fail to have an insurance checkup with the agent to see if their policy allowed for that additional 40%. Okay? Now, what they will do is I get a call and they say, Jerome, why did my insurance go up $25? Well, my explanation is, as building materials increase, the cost of what you have now is greater than it was 2 years ago. And because of it increasing, your cost of insurance may have increased $25, $30. Okay? On the other hand, there are a lot of insurance agents that will sell you what we call an ACV policy, and it's called an actual cash value policy. Okay? What that policy does, it does not allow for that increase in replacement costs. Actually, it pays you a percentage of what your house or dwelling is actually worth. It may pay 80%, it may pay 90%, but it does not pay replacement costs. So when you're looking at your policies, make sure you ask about whether it's business or homeowners, ask, does it provide replacement costs? Okay? The second part of your policy, it covers your personal property. Nobody knows how much personal property they have. And when I say nobody, I mean nobody. Because you may have purchased something 10 years ago, and it could have inflated or it could have deflated. It could be worth nothing, or the value of it is probably 10 times as high as it is now. Antiques. I have a young lady, she's got $1 million worth of furniture in the house. She never knew it. When she called me the first time, she says, Ms. Hubbard, I had about $150,000. When I went to the interview and looked at her stuff, she's got $1 million worth of furniture. The youngest piece of furniture in her house is about 200 years old. At that time, it was dollars and cents. Now it's Benjamins and Franklins, as they say. So we have to make sure that those things are taken care of. On the other hand, personal property is just like the dwelling coverage. It needs to be at replacement cost. If I bought a table 10 years ago, I want to have the money to replace that table if something were to happen to it. I don't have to spend money out of my pocket. And the only way there is money out of your pocket, and I'll explain that to you later. And the next thing is this. If your business is disrupted because of weather, fire, water, or whatever the case may be, make sure you have loss of use. All right? Loss of use is two things, and it's very important. Because one, if you've lost your place of business, you need somewhere else to operate. Make sure your insurance company provides loss of use so that they will pay you to occupy another building to continue your operation. Next thing, loss of income. Well, I didn't have income coming in for 6 weeks. In more than 40% of the cases, small businesses won't last 6 weeks without an income, okay? But this piece of paper that you got that you think is just a piece of paper, it will provide you with income during that period while your business has been disrupted, okay? All right, other things on your business policy. There is a deductible, and I just mentioned there are some things that you may have to pay. The deductible is one, okay? If you have a $1,000 claim and you got a $500 deductible, that means that the insurance company is going to pay you $500. That means you pay $500. Now, a lot of people say, I don't want a deductible. I don't want to have to pay nothing. Why am I paying insurance? Okay? The deductible is what makes your insurance affordable. Without a deductible, you may not be in business too long. Or if that loss happens, you may not be in business. Because if you get a deductible where an insurance pays for everything, I couldn't afford the premium and I sell insurance. Okay? So the deductible is the thing that helps you to save money, okay? And it's another thing that says to the insured, I need to put some money away so that if something were to happen, I need at least this $500, okay? Now, there are going to be a lot of cases where when you come out with that replacement cost, you may not pay a deductible because the appreciation may outweigh your deductible, okay? But deductibles are very important. And a deductible, you can get $500 to as much as $20,000. It just depends on how much of the liability or risk that you want to assume or how much premium you want to pay. You know, there's a lot of commercials out there now. We're gonna, how does they say it? We're gonna let you manufacture your own insurance policy. In other words, we're gonna let you do an insurance policy and you tell me how much you want to spend, okay? That's only saying you can choose your deductible. It's not telling you, well, you can get $150,000 insurance. Now, how much do you want to spend? Well, I want to spend $10. That's everybody's logic. But it's not, and they are so misleading. You pay regardless of what insurance company you are. Now, some are cheaper than others, some are higher, but you're going to pay based on which coverages are there to fit your needs, okay? Because a lot of people can assume a $20,000 deductible. Most of the people I know, $500 is pretty good. But at the same time, the person that's paying a $500 deductible, his premium is going to be a little bit higher than the guy that's paying that $20,000 deductible. And I get a lot of people that call me, they say, well, you know what? My neighbor right down the street, his insurance is less than mine, and we got the same car. Okay, that may be true. But can you assume as much of the risk as your next door neighbor? Can you afford to go with that $2,000 deductible to make his premium lower? Okay? No, I took the $100 deductible. Well, you're going to pay more. Okay? And another thing, when we talk about insurance, we have to talk about the people that actually buy insurance. Okay? Insurance is not based on the car you drive or the type of business that you have. Now, don't get me wrong, because a lot of that goes into the equation, but for the most part, insurance, we insure the person. Okay? Pastor Hurd is in the audience. He may get a lesser premium because his job does not require him to climb up ladders or to work on skyscrapers. Okay? We got Mr. Persley. He's the chief of police. Oh, he's in a very hazardous job, but he sits behind a desk. But his officers out there on the front line, you know, they assume a lot of the risk. Okay? So when we're talking about business insurance, the insurance prices are based on how hazard is that job. Okay? If we got contractors out there that shooting air guns and things of that nature, a contractor's policy is going to be a whole lot more expensive than somebody who sits behind the desk and do consultant work. Okay? Also, while we're talking about what type of work they do, a lot of people talk about workers' comp insurance. What is that? That covers our employees. All right? Again, why is it so high? Well, it's based on the type of exposure that they are exposed to. If they're working on 20-story buildings, workers' comp is high. Okay? If they're sitting behind a desk and you clerical people, workers' comp is cheap. So insurance is based on the person and the risk that's involved in the type of work that that person is involved with. Okay? There are when people get their insurance policies, they may get 4 or 5 pages of insurance information. And believe me, some people, they never look at them. Only thing they want to know, and then talk about car insurance, they pull their insurance card out and they say, I got it. But you miss 90% of the boat. Because every accident that occurs, the first thing they ask you is, am I covered? Okay? They get a bill every month, they call the office and say, how much do I owe? Why do I owe? Okay? On all declaration pages and bills, there's a summary for everything that happens. I don't mind telling people that, but we've got to get into the habit of knowing what you have. That's the key to success, knowing what you have and knowing what you have is going out. All right? If the liability is more than the income, we're going to have a problem. Okay? So the key to anything, again, and we'll put it in simple terms, the key is knowledge. Okay? I want to talk about a few more things that also help to protect your assets. We've talked a little bit about a business policy. What I'm going to talk about now is a little bit something different, but it will be an extension of your regular policies. Okay? And it's called a personal liability umbrella policy. Okay? In all of your policies, car insurance, whether you got a recreational vehicle, a boat, four-wheeler, you own a business, it does not matter. Until tort reform comes into existence, attorneys know no bounds of what you are liable for, okay? They grab a bunch of mud and throw it on the wall and whatever sticks, that's what we're going with, okay? There's no bad mouth on them because that's their job, okay? But my job is to protect you, okay? For instance, you came to me and you got car insurance. And the state of Georgia says the lowest limit of car insurance are 25, 50, 25. Now I'm going to explain what that is and then we'll go to the next point. If you go and talk to your agent, he tell you you have limits of 25, 50, 25. What that means is if you are at fault and you run into somebody and they are hurt and their car is damaged, the most they're going to pay in that accident for their bodily injury is $25,000 per person, up to that middle number, which is 50. So that's the max they're going to pay. So if 10 people are hurt, the max they're going to pay out is $50,000. Okay? And that last number, that $25,000, that means the most in property damage that we're going to pay is $25,000 in property damage. Okay? Now, Mr. Hurd goes and have an accident. Oh man, he came to me, he said, Jerome, I want the lowest liability you can get, 25, 50, 25. I said, okay, well, and I tried to sell him something higher, but he said, I want to go with this, okay? One night coming home, he didn't see this person. He runs over him, kills him, okay? We know what's coming next. He gets the letters. Mr. Hurd, we're going to sue you. That's after he done visit with Mr. Purser. We're going to sue you. And they're going to say, we want $1 million. Oh, Mr. Hurd, he's calling his insurance agent. Oh, Jerome, what am I going to do now? Well, let's take a look at your policy. That's the first thing. It doesn't matter what you do or what kind of damage you cause or who you kill. You are only subject, let me back up. You're subject to more, but your policy only pays what's in the policy, okay? Now, what he's subject to? Oh, he's subject, he's going to lose his Cadillac, he's going to lose bank account, his wife is going to be stuck out there too, and then he's going to go to an attorney to try to do whatever he can to fight that, okay? But the place we should have started at is with me, okay? If you drive a $100,000 car, why purchase $25,000 liability? Okay? Because if you can drive a car like that, more than likely you got some assets back there to help you maintain that type of lifestyle. Okay? So to further help the insured, we have what we call a personal liability umbrella policy. Okay? So let's assume he did get liability limits of, say, $100,000. The attorney says, you know what, we need $1 million. Okay? And let's assume Pastor Hurd did purchase that PLUP policy. Okay? And he purchased it for $2 million. And you know it probably only cost him $400 or $500 a year. So now the attorney says, you know what, Mr. Hurd, you're going to be liable. We're going to take the money that we get from your insurance company on your car insurance. Is there any other way we can get some money from you? He said, you know what, I had this PLUP policy. PLUP policy comes to the rescue. A PLUP policy will pay in the event that you're liable, in addition to what your car insurance pays, or in addition to what your business liability pays, and it will pay an additional amount up to the limit that you chose. And that limit starts at $1 million. Okay? And it may be pennies on the dime. And some people say, you know what, I don't want to spend that extra $15. Nobody wants to spend money until that attorney until you get that letter. Okay? I've been an agent 35 years, and I can give you a whole stacks of letters. And no matter who it is, they're crying the blues, but it could have been avoided just to spend an extra $15 or $20 a month. Okay? So when you're talking to your insurance agent, the main thing you want to do is talk to your agents and discuss as much as you can so that there's a need that will be uncovered. You know, people don't like to talk to us because they say, you know what, we pay insurance and the only thing we get is a paper, a sheet of paper. And basically that's correct. You know, basically that's correct. But when an attorney visits, he give you a sheet of paper. And that same sheet of paper make you cry. In the event of an accident, this sheet of paper makes you smile. Where one giveth, the other can take it away. Where one protects your assets, the other one go after your assets. Okay? Let's talk a little bit more about asset protection. You guys may be in business. You went in business with your buddy. You went in business with your wife. You went in business with your best friend. Okay? And y'all just cruising along, and all of a sudden something happened to your business partner. And he may be the person, or she may have been the person that went out and got all the accounts for you. They may be the person that made it happen. Okay? And you lost that person. What are we going to do? For 6 months, most of us will sit just like this and kind of wonder what's going on. Okay? There's a way to overcome that. It's in the form of life insurance, and it's called key man life insurance. Okay? You and business partner, you guys are partners close. Do a key man life insurance policy on each one of you. So if that life or that business relationship is taken away from you, that life insurance policy kicks in to take away he left off. It gives you a chance, like the old folks say, it gives you a chance to get a hope on the things. Okay? And that's the most important thing. But do people trust enough for that? Nope. But on the other hand, let's do this. You're in business with your best friend. Would you like to go into business with his wife? Do you want to go into business with his son? Do you want to go into business with his mother? Or with his granddaddy? Because when the laws say whatever he had is going to go down to the next person. So do you want to be in business with that next person? Do a key man life insurance policy. It takes care of that. Okay? Auto insurance. We're going to touch on that just a minute. Because that's something, even though we're not in businesses, but we all have to come see me for life insurance or car insurance. So let's talk a little bit about auto insurance. And we're going to apply it to business as well as personal, okay? Because there is a difference. All right? And the difference is this. A vehicle is a vehicle. But what do you use it for? That's the difference. Okay? I got a pickup truck. I drive mine from just to the office and back home every day. He got a pickup too. But he uses it to pull this stuff that he cut lawns with every day. That's a big difference. Okay? Again, we are ensuring the risk that it's used for and the person that's using it. Okay? If you are using your vehicle as a business, again, remember those three numbers, 25, 50, 25? That's where you need to start. Because if it's used in business and you have an accident, the first thing an attorney is going to look at is, what does that person do? Does he have assets? If I just cut yards, that's a business. And that attorney is going to assume I got some assets. So whatever the case may be, they're going to come to get what they can. Now, there's an old saying, you can't squeeze blood out of a turnip. You know, you're right. But you'll have so many sleepless nights, you'd wish they got the blood just so I could get some rest. Okay? So to avoid all of that, premium is important. And everybody can't afford, John can't afford what Jim has, vice versa. But you have to get the policy that's going to fit your need, what you're going to insure yourself against. If I got $1 million, if I have $1 million in the bank, I'd rather write a policy to protect my $1 million. Let's spend $1 million out of the insurance company, okay? Because that's what it's all about. Now, it may cost me $500. Yeah, but I'd love to pay that $500 instead of them coming at my $1 million. And you know the best part about it? People don't even realize this. When you have insurance and somebody sue you, do you know that the insurance company will get a lawyer for you? So when people are talking about how high my premium is, it's not about that 65 Volkswagen or that 2015 Maserati. It's about protecting what I worked so hard to get all day long. Why is my bill $3 more? You know how people call me and say, my bill went up $2. Okay, well, let's look at why it went up $2. Okay? Let's say you had an accident here, you had an accident there. You got 3 tickets. The risk that we originally insured has changed. Okay? When you came to me, you had 0 tickets, 0 accident. But now there's a trend developing. That person that I originally wrote is not the same person that we're dealing with now. So the company has to make adjustments based on who they are insuring as of right now. Okay? There are a couple of parts to auto insurance. We've talked about the liability part. Let's talk about another part. Comprehensive coverage. Very important. Comprehensive, it applies to a lot of things. Business insurance, car insurance. And comprehensive coverage is this. It covers things like fire, glass breakage, run into an animal, hit a stop sign, hit a curve. Somebody slashed my tires last night. Y'all to see my car, they keyed up on both sides. It's just messed up. Those things are covered with comprehensive coverage. Anytime there's an accident and your car does not hit another vehicle, it's covered by comprehensive. Okay? There's a deductible. Again, we pay everything above what that deductible is. That's your part, okay? Collision. That covers any time you run into another vehicle, okay? There's a deductible. The deductible does not apply to the vehicle that you hit, but it applies to what you pay again, okay? We pay everything over that deductible. The higher the deductible, the lower the premium, all right? What they say on TV? Let's make a policy based on what you can pay. Well, let's don't do that. Let's do a policy based on what you need, okay? Because paying $10 extra a month for what you need is a whole lot better than paying $20 less for what you don't have, okay? Medical coverage. Very few people want medical coverage. Why? Because the first thing they say is, I got Blue Cross Blue Shield. I got health care. I don't need that medical. That may be true. But if I'm riding in the car with you, I don't have insurance. And you just ran over somebody and I just hurt my neck or I just broke my leg. Well, you need that medical insurance, not just for you, but for the people that are in the car with you, okay? Same thing on business insurance. You need medical insurance because that person on a job might get hurt. Do you want to pay for it or would you rather me pay for it? Okay? Medical insurance, there is no deductible on it. If you use your own health insurance, you got to pay your copay, you got to pay your deductible, and they're going to tell you what doctor to go to. If you're hurt in a car accident and use your medical insurance, you go to who you want to, no deductible, and we'll pay up to what that limit is. And you can get all the way up to $50,000 med pay. And if you're used to somebody riding in the car with you a lot, and especially if you carry passengers back and forth, you should get every dime you could. Because if you don't get it, they'll get it out of you in the event that something were to happen. Okay? Emergency road service. Everybody needs it. I very seldom write a policy without it. For one reason, especially if I'm married and my wife have a flat tire, I don't want her sitting beside that road waiting on me or waiting on somebody to come pick her up. I would rather have her call roadside service and get her taken care of. At least get her to a place where she's comfortable. And that's the very least we can do for our spouses, you know? Car rental. Two ways car rental works. If I have an accident and I'm at fault, my car rental kicks in. And again, I'm going to be bound by the coverages that are in my policy. Okay? If somebody hit me and they're at fault, well, their insurance is going to pay for me to have a car rental. Okay? And I may be able to keep that car for 6 months because they have to take care of me to put me back like I was. Okay? Accidental death, loss of wages. Very few people think that those things exist in an auto policy. But if you get killed in a car accident, it's accidental death, and there is a coverage for that. Or if you get hurt and can't go to work, there's a coverage that will pay you so much a week while you are disabled. But ask your agent about those things, okay? Ask your agent about those things, all right? Let's talk about a few more things, and then we're going to open up the floor for question and answers. We could talk about insurance all night long. State Farm, we have 75 different products. Do all of them apply to you? No. Do you want to listen to me talk about them? No. But what we try to do is, when you come to my office and we have a conversation, I do more listening and sometimes than I do talking. And the reason I listen because I want to know what you need. Now, you probably won't come there for that. But by the time you leave, I'm going to mention something to you. Am I right, Mr. Person? We're going to talk about it. Another thing that we need to talk about is health insurance. All right? And we're not talking about Obamacare. We're not talking about, I guess, Blue Cross and Blue Shield. What we're talking about is the health insurance that an employer has to provide to his employees, okay? And I think the state of Georgia, if you have a business and you have at least 3 to 4 employees, you got to provide some type of health care, okay? And it's important. Why is it important? Well, first of all, it means that you're taking care of your employees. You know, benefits are essential today, okay? The other part on it, the other side of the token is, if they were to get hurt on your job, would you like to pay them their regular salary for 6 months, or would you like me to do it? Okay? Or would you like the insurance company to do it? So, and another thing, it helps you maintain your employees. The more benefits you can give to your employees, the longer you're going to keep them, the happier they're going to be. And so on and so on. More productivity, productivity you're going to get out of them. So there are a lot of benefits to everything. All right, I gave a couple of booklets out. And I didn't keep one for myself. Yes, I did. Look at it. The first booklet I gave is called Protect Your Memories. You know, as we go through this cycle that we call life, you know, the only thing that we're going to have in the end is memories. We won't have the fine clothes. We don't have the black hair we used to have. Oh, man, we don't have that slim physique. You know, all of the physical things that we have, they're all gone. But the only thing that we're going to have that's going to be a continuum is memories, okay? All right? In the brochure, it kind of gives you a guide or an outline how to protect some of your memories, all right? And it's called loss prevention. So, you know, the things that we have, they worth a lot. But when you really look down to it, they're just memories. What you did yesterday, it's just a memory. It could have been a good one, or it could have been a bad one. But it was just a memory. But it's very important. I wish everybody would take the time to read it. Okay? There's another brochure. This is the most important brochure, and it doesn't have to be in the form of a brochure. But it's called an inventory booklet. Everybody here has something, but they don't know what they have. Now, this is not going to be a booklet for you to say this is going to be everything that you have, but it's going to be a start. You know, if a fire were to happen tonight, it burn your business down or burn your house down, you would probably only remember 50% of the things that you have. Why? Because we don't think about the vase that was sitting on the table, the little group of flowers that we had, or each piece of dish that's in the china cabinet, or we don't think about the costume jewelry that we have. And when somebody called me because their house been burglarized, I said, how much did you have? Oh, I had about $1,000 worth of jewelry. Can you give me an itemized list? I don't know what I had. Write it down. Okay? And you don't have to go back and start doing what you already have, but when you purchase something new, write it down. If you really want to get technical with it, take your video camera and video everything you have. Just go through your house and just video stuff. Just video it. And if you go back and look at that video 10 years from now, you say, I forgot I had that. You know, it's so bad that when we have a loss, Right now in the state of Florida, all of the businesses and houses that are destroyed, the news, oh man, it's $20 billion. That's how they say that scraped the surface. They hope that that's all it is, $20 billion. But if you go back and put your knickknacks and all of the small stuff that you had, it's hundreds of billions of dollars. People just forget about small things. Oh man, what kind of car did you have? Oh, let's see. I had a Cadillac, I had a Mercedes-Benz. That's where it stops. Did you have anything in it? Don't think about it. Or, I had a suit of clothes in there. I might have had a camera in there. Some guys have their firearms in there, and they forget about it. I don't want you to forget about it, because you just did a policy with me that I got to pay you for, and I want you to remember it, because I want to replace it. And if that agent didn't talk to you again about replacement costs, you're going to be at a loss anyway. Okay? So make sure you take the time to start an inventory, whether it's with the booklet that I give you or one on your own. Inventory it. A couple more things we're going to talk about, then we're going to open it up. We talked about key man life insurance, but we've got a policy or something that's worth more than a key man, and that's to insure everybody. Everybody needs a life insurance policy, okay? And a lot of people say, I got life insurance on my job. Oh yeah, you do. That's great. But I get people that's 65-year-olds, they don't have that job anymore. And they come to me and they say, I thought I had life insurance. I had $150,000 when I was working. Now it's down to $10,000. And I say, Mr. Percy, I talked to you that about 20 years ago. I talked to you once a year. And we said we was going to do it, but we never got around to do it. And they say, well, let's do it now. I said, okay. But at 65, you done set your budget based on what you're going to get at retirement. Because that retirement check not going to increase every month. And the money that you got in the bank, you want to use that for hard times, when things are really going to happen. But when you come to me at 65 and say, Ms. Hubbard, that life insurance you got, we need to talk about it now. Well, Mr. Percy, 20 years ago, that $200,000 life insurance, it was only $100 a month. Now $100 a month won't buy you $10,000 worth of life insurance. So we got to start preparing today for what's going to happen tomorrow. Some of us are going to see tomorrow. Hopefully all of us do. Are we prepared for it? What do we want to leave our kids? What do we want to leave our spouse? If I died right now, I would hate to see my wife have to get remarried just to continue the lifestyle that she's living, or vice versa, And there are two types of life insurance. There's a brochure. It's called term or permanent. And there's a life insurance policy to fit everybody's need and everybody's assets. But it's up to you to talk to your agent about it. Again, it's term and it's permanent. Some people call permanent insurance whole life, or they call it universal life. But talk to your agent about life insurance. Don't wait till a funeral come. Then say, what, my mama just died. They'd have a $300 worth of life insurance. Because that's what they sold them back in the day, industrial policies. They were worth $300. And people say, oh, they got life insurance. Talk to your agent about life insurance. All right? Last but not least, we're going to talk about it. Then we open it up. I said that 10 times already. But insurance is only a sheet of paper, right? Until there's a claim. What do we do when there's a claim? I have a few brochures that explains exactly what to do. But the key part, when there's a claim, the first call that you make is who? Talk to your agent. Okay? Talk to your agent. Why is that important? 2 reasons. Every claim or every loss that you have is not a claim. Now, I know that don't sound right, do it? Every loss that you have is not a claim. Why? Does every headache make you go to the hospital? You get a stomach ache, do you go to the hospital? All right. Every claim is not a claim. Every loss is not a claim. First part, if your loss is less than your deductible, do you need to file it? No need to file it. It's not going to be a payment. Okay? There are a couple of things that a lot of people in Georgia don't know. If you have 3 homeowners claims within 3 years, an insurance company in the state of Georgia can drop your coverage. Okay? I'm going to repeat it again. 3 claims, 3 years, no coverage. What happens then? Well, they have what they call non-voluntary insurance. Okay? The premium is about 3 times higher. Okay? If you have a mortgage on your house, your requirement is to carry insurance. So if you had 3 claims in 3 years, Allstate, State Farm, Progressive, they're going to drop you. They're going to send you to Georgia underwriting. Premium is going to be 3 times higher. Your house payment is going to go up. Then you ask yourself, why did my agent tell me about them 3 claims in 3 years? Because the little claims that you have, the $200 claim that you claim that you thought you was making some money out of, on the back end it's going to bite you, because now you're going to pay an additional $1,800 a year for insurance, and that little $200 didn't make sense. Now let me break it down a little bit further to you. We had the hurricane back in 2018, right? Everybody lost power. Some people had no damages to the house, but the freezer got cut off and they had a claim. They said, I had $700 worth of food in my freezer. We didn't question that, okay? But they had a $500 deductible. So 700 minus 500 leaves how much? 200. Do you want to claim on your record for $200? That's the question. And a lot of people say no, but that's what people did. And then when the next one came in 2018, they got another $200. So that's 2 claims in 1 year, okay? 6 months later, the winds came and blew the roof off. $4,000. Now that's a claim. You know, I'd submit that one. But the thing is, now they got 3 claims. Okay? So you got 200, 200, and you got 4,000. But now I got to go here to Georgia underwriter. I'm paying $1,800 more. That's about $5,600 more in a 3-year period, and I only made $4,400. Okay? So before you go and say, Mr. Agent, I want to make a claim, talk to your agent about your loss before it becomes a claim. All right? Because once that claim is turned into what we call our claims adjusters, whether they pay you or not, it's going to still be a claim. And a lot of people say, you know what, they didn't pay me no money, that ain't no claim. If it went through the process, it's a claim. Okay? So don't get mad with your insurance agent if he's going to tell you the best thing to do. Sometimes we have to eat a loss. And I know that's what people pay their money for. That's the first excuse I get. I paid my money for it, I want to get paid. And you know what? I ain't going to argue with you. But I'm going to lay it down for you so you'll understand. So when that next scenario comes, you'll understand where it is. So When we talk about insurance, the key to insurance is talk to your agent, you know your agent, and let your agent know you. Okay? Now, one last thing, and this is a pet peeve. As adults, we have a lot of children that drive cars. Okay? And we never tell our insurance agent about it because we want to save their money. And you know, I don't blame you. It's all about saving money. But again, if you don't tell him, it's going to come back to bite you. It's going to come back to bite you. Once your son or daughter turns 16, get their permanent driver's license, they need to be added onto your policy. 2 reasons for it. One is you want to protect them assets that you already got in your pocket. Because if the insurance company has to pay a loss, okay, you want to be protected. You want to be protected because they can deny coverage because they're not a listed driver. Okay? They can deny coverage. All right? The other reason is this. When we first do insurance, we're going to say, does your son or daughter drive? Do you have any children? You're going to say, yeah. I say, well, let's put them on there. No, it's going to cost too much. You can pay now or you can pay later. Okay? Because even though the premium is high, if that son and daughter picks up a ticket to have an accident, then premium goes up to an additional $150 above what you were going to pay. Okay? Now, what's my advice to insurers? Don't go out and buy your son or daughter no Mercedes-Benz. Don't go out and buy no 21, 22 car. Let's start them out with something small that they can tear up because they're going to tear it up and it ain't going to hurt your pocketbook too bad. You know, if you can buy a Mercedes-Benz, you can put $3,000 in a car. So let's start out small, and insurance is a whole lot less. Okay? And the caveat to all this that helps the insurance premium gets real low is, let's make sure our sons and daughters maintain a 3.0 GPA. That's a 15% discount. Okay? Let's make sure they take a driver's training course. 2 reasons. It helps them to drive, and it saves an additional 15%. If your premium is going to be $600 a month before, with those 2 items, that's 30%. So now we're down to $400. So, but what I'm saying to you is, there are ways to combat things that we don't like. We don't like insurance. We got to have it. So let's get the biggest bang for our buck by getting what we need. But in order to do that, we need to be able to talk to your agent, and your agent needs to talk to you so that everybody has an understanding. And once that is done, it may not get you to the money where you want to be, but as they say, when it's game time, when you had that accident, it'll get you out of a lot of problems that you would be in. Okay? With that, I'm opening it up for questions and answers. There are a lot of things to talk about in insurance, but we'll see if there are any questions and answers.
But I'm gonna let I've got several.
Okay.
Well, one of them, I'm trying to help a member. The members in their 70s.
Okay.
They had term life insurance, and what we all learn as we get older and start growing gray, that it was nice when we were younger, but now it's almost unaffordable for him. It's only a $10,000 policy of life insurance to bury himself. And he's struggling to pay it. And it appears from the letters I saw that they really want to and they're suggesting to them that it's probably going to go up every year. Is in a case like that, is it, because I don't want to give bad advice, is it better, if you're paying about $250 a month, or $267 a month, that's what it is, for $10,000, and there's a possibility that every year it's going to go up, and you're about your early 70s or mid 70s, is it worth the gamble to just go ahead on and set that $267 a month aside for your burial, or is it wiser just to keep the $10,000 policy paying the $200 and something a month?
Okay. Very good question. And I'm going to answer it in two parts. And the first part is, what type of health condition is he in? Okay? Your health condition, when you get to be age 65 or better, plays a very important part in what type of premium you're going to be paying. And it also kind of plays into what type of policy you can actually purchase. Okay? If you got cancer, now when I say cancer, I mean ongoing diagnosis, or if you got heart problems or things of that nature, if you got a policy and have those conditions, hang on to it. Hang on to it. Do not let anybody tell you not to spend that $260 a month. Okay? Because at age 70, you won't be able to get it replaced. Okay? Now, let's back up to the other scenario. You're age 70 and you're in great health. There's some $10,000 policies out there that may cost you 1/3 of that. Okay? But you've got to ask the right questions and give the correct information. All right? Now, the third scenario is, and we can't predict it, but how many months are you going to save that money before something happened to you? We don't know. So that's the question. So my scenario is this. When somebody talks to me about life insurance, I'm going to listen. You know why I'm going to listen? Because when people come to see me, they put their future in my hands. Okay? They put their assets in my hands. Okay? So I'm sitting there, I'm listening to him, and he's going to tell you know what? 10 years ago, I had prostate cancer. Okay? I hadn't had any problem with it since. We got it in remission. No heart problem. You know, I don't have diabetes. I don't have high blood pressure. We can handle that. Okay? We can handle that. But now if you come talk to me and you say, what, I got a little $10,000 policy, but you know, I got high blood, I'm taking insulin and those things. My advice is going to be one thing. Let's keep what you got, because you may not be able to be insurable for the next product. And the other thing is this, and a lot of agents won't tell you, when you have those diseases or those problems and you don't tell that agent about them, there's what we call a look at period, or I can't remember the name just off my tongue, but within the first 2 years, if you die of those things that were not disclosed, they won't pay that policy anyway. Okay? So there are a lot of scenarios, but again, you have to ask the right questions, and your agent has to listen to all of the things that you tell them. Okay? Business-wise, life-wise, health-wise. So there's a partnership there. If you want to get the correct answers, you have to be truthful up front. Okay? And then let's make a decision together. Because whether you believe it or not, when you have your losses, we go through it with you. And you may not believe that. A lot of people say, I can't get in contact with Jerome when something happens. You may not be, but that claims person is going to call me. And then I got to get with you on that. And it's not a matter of we're not there with you, but we have to divide our attention up a lot of ways to make things happen. But believe me, when you walk out that door, we want the best thing for you. Question?
My next question is there such an animal as life insurance that you can pay off, that when you first get it, you know, I got to pay it for 15, 20 years, and then after that, it holds its value, and I don't have to pay anymore.
Absolutely. They are what we call single premium life insurance policies. You can make one dump into it. The policy is paid up for the rest of your life. On top of that, it pays dividends and interest. And that's the best part of it. Because the dividends and interest will accumulate so much, you'll end up getting all your premium back, plus your death benefit. Okay? Next thing, there's another policy you can pay for a certain number of years. Okay? And there's two types. You can pay for one a certain number of years, the policy is paid for, okay? And it's called a 20-year policy, 20 pay life. Don't get it confused with a 20-year term. It's a 20 pay. There's a 10 pay and there's a 15-year pay. Just depending on how much money you want to pay in that length of time to make your policy paid for. It also grows dividends and interest. Okay? And then we have, so we got the 10 to pay, we got the one dump, and we have what we call a universal life policy. Okay? You can dump money into that, and it also does the same thing. I've got a insured, I'll share this with you. He dumped, I think he dumped in about $18,000 into it when he was 20 years old. He didn't pay anything else into it. He just recently died. He was 67. He had 3 kids. I gave each one of them $100,000. You know, and also when you talk about business insurance, if you want to save money as a business, contribute money into what we call a SEP, which is a self-employed person's plan. The interest rate is so great. I've got people now that is put in, and you have to talk with your tax attorney to help you with this. So they'll let you know how much you need to put into it so that you can write it off on your taxes. But you can make a one-time dump. I've got one guy, I'm looking at him now. He dumped in $16,500. The tax attorney told him to do that every year. He just did it 1 year. I just paid him his last check for $2,400. I gave him a check for $2,400 for 4 years. Might have been more than that, because he had $69,000. That's how much money he made off of $16,000. So the money you can make by investing it is more than the money that you can make while it's sitting in the bank. And that's the key. So you can make more money on life insurance policies than you can letting it sit in the bank. But just make sure you choose the right products. We got 75 different life policies or different ways that you can invest. All of them are not right for everybody. But the thing is, you got to start. The key is to start. As you make more, you can do more with your money. As you do more with your money, then the more money you can keep. So, all
Last question. Then, I'm helping some people recently where the person died, but all of the beneficiaries are dead. They never changed it.
Okay.
So, do you have to go through probate to try it, or do you lose? Is that lost forever?
It's not lost forever. You'd have to go through probate to get what they call a estate, and then that way that estate will get the money, and so whoever is the executor of that estate will be in charge of it. Not necessarily that person will get it to spend, but if they're in charge of that estate, then they will be able to put that money into that estate so that that person will be able to do what the court say is going to be done with it. Yeah, and that brings up another thing. When you talk about life insurance, you need to visit with your agent every year when you do life insurance, because If a beneficiary die, you want to change, okay? I can actually own a policy on Pastor Hurd if he let me, okay? So if I own that policy and if I die before he do, what's going to happen to that policy? You better talk to your agent about that so you have that all in writing, okay? Or when you talk about business partners, there are arrangements that require a lot of paperwork, but it's not a lot, but you just got to be able to communicate. You know, I have not found a scenario yet that cannot be done, but it has to be done the right way, and it has to be done with the understanding of all parties, okay? So, and also remember this, if you want to do a life insurance on somebody and they're over 16 years old, 16 or older, they have to be there to sign that policy. You just can't walk in our agent's office and say, I want to take life insurance out on whoever. If they're over 16, boom. Or if it's your grandchild, you got to have permission from the parents to do that, okay? So just make sure, but it can be done, but you just have to make sure it's done the correct way.
I have a couple of questions from online. One of them, you kind of hit on it earlier. Which is the best, term life or whole life?
There's no doubt a permanent plan is the best. But what is best for your wallet right now? Okay. And remember this, if you do a term plan, if you work at Walmart making $10 an hour, you may not be able to afford $100 a month, okay? So let's do the $20 a month. But see, next year you might be working at the bank and you know what, I can convert this term policy over to a permanent plan. So again, let's start somewhere based on your need and what your budget is, and then we can go from there. Just by starting, you're 95% ahead of the game. But you just want to make sure that when it ends, you've got the best thing in place for it. Yes, sir. And
one last, just express about adding car insurance onto your homeowner's insurance. What are the benefits? Are there pros and cons to it? There's no such thing as adding car onto your own. Let's break the myth. You're not adding car onto your home and home onto your car. Okay? That's not what it is. It's the simple fact is when you insure both with the same company, you're going to get that discount. Okay? So when somebody calls, I want to add my car to my, no, you're not doing that. We don't do that. But if you let me insure both, I'm going to give you 25% discount on your home insurance for doing that. And also I'm going to give you 17% discount on your car insurance. Okay? So when they say a bundle, that's all of those are just figments of your imagination. You're just putting all your eggs in the basket and you're reaping the benefits of it. That's all. And another benefit of that, you only got somebody to call when something goes wrong. And another benefit, the insurance company is going to take a whole lot better care of you. If you think enough of them to give them all of your business, when it comes down to what we call nut cracking time, they're going to take care of you. Unless you start making them $200 claims. All right. All right. So we want to thank the original Jake from State Farm. I think we will have afterwards, for those who are here, they will have some other questions. But I do have one question. You talked about the replacement value. So if I have you talked about entrepreneurship is the future. So if I have I'm using a room in my house as my business.
Office, as your office.
And there's a fire at the house. For that replacement value, is it a replacement value of their office or the entire home?
Well, you're going to have two separate policies. Okay. For instance, we got you insured on your consultant business, and we know you use that at home, okay? But we also have your homeowners insured, okay? So we're going to look at your office policy and replace everything that you use in your business under that end, and everything that you use on your homeowners, we're going to use that on that end. Now, let me also say this. A lot of people have businesses that they have in the house and don't tell us about it. we still pay up to so much money to replace those things that they use in in-home business. Okay? But the only thing that they don't have is that liability part. Okay? So the contents, no problem. But the liability, that's the thing that you want to be protected against. But the replacement cost, whether you got the business and the home, is going to be a replacement cost on both policies.
So if you can, please stay around for those who are here. For everyone else, thank y'all for tuning in. We do have your contact information is on it's on Facebook Live. But for everyone else, listen, we're not advocating for Jake from State Farm, but make sure you reach out and you need insurance. Don't go out here risking every day, because we never know what may happen.
Or if you got just questions, just give me a call. You know, a lot of people do that too. You know, I'm not beyond leading you in the right direction, because when it's all said and done, that's what we're here for.
We want to thank everyone for coming out to another, our third series of the Life Empowerment Seminar. Be sure to come back next week, and we will have Mr. Ron Rowe, and he will be talking about financial planning. And those who may have heard it before, is a very informative, because the future of your finances, instead of money making you work, you make the money work. So thank you everyone for attending tonight.
Thank you.